Okay, wait, before you click off this video, because you have an attention span of a goldfish, I want to make a bet with you. And if I lose this bet, never return back to my channel. Now, what I have right here is a trade that I'm going to present to you, and I'll break it down. We will hit this take profit 100%. And as proof, right, I'm going to screenshot it right now. Hang on. I'm going to screenshot it right now. Go to my Discord, send it in, free trade, okay? You can see currently I'm in Discord. And let's go back into the chart. Now, if this does not hit take profit, never return back to my channel ever again. But obviously, I will win this bet because I know I'm going to win. It is guaranteed. Now, let's break this trade down. Okay, now your goldfish attention span is probably already over, but for the ones that are still watching, here is the breakdown of this entire trade. So as you can see, we are on the daily chart, and I'll remove this for now. And as you can see, we had kind of up and down movement. Basically, we're in a consolidation, right? We could go into the weekly, but I've analyzed the weekly chart already a couple of times, so we are going to go over it just from the daily perspective. As you can see, we're in a consolidation and we have an FEG right in here. Now, why is this so important? Daily FEGs always get traded into. Now, of course, there are rare occurrences where it does not do that. You know, it just doesn't trade back into the daily FEG. That happens, but it rarely happens. And most of the time, it just takes a little bit of time until it actually does that. So you have to be more patient. But generally, we always trade back into the FEGs. The daily time frame is very reliable. Now, this is just the very first thing that I'll be looking out for. The next thing that while I'm basically longing this and not shorting is we have a price gap in here. Now the thing about price gaps is we always trade back into them. Now the thing about price gaps is that we always trade back into them. Always. And not just with a wick or something like that, but it has to be with the body close. As you can see, this candle, right? This candle will most likely close either here, so of the high of the price gap, or the next day or the following day after that. But one of them will totally engulf this entire basically area that I've marked out for you. Not 100% of the time. I need to say this because some people are just they just take it too literal, right? It doesn't work 100% of the time, because if it would, then we would all be the richest man on earth. But basically what I'm trying to say is that most of the time it works, and if it works most of the time, you can already have a very good framework to work with and make a trade. So the next thing that I want to talk about is that we have on the, so let's go over the daily first. We are not there yet. We have relative equal highs. Now, why would you say those are relative equal highs? This is more of a subjective opinion, but you can learn this in my Discord. It's not that hard. Basically what we have here is we have an FEG aligning with relative equal highs. Now the reason why those are relative equal highs is because if we go into the 4-hour chart, those are actually relative equal highs, as you can see. Now, of course, if you now say, because those were the previous relative equal highs, we traded into them, took them out, and then hovered over and over again. So those are not valid, but this high still stays in here. And just from experience, this high will get violated as well, right? Our profit target is not even that high, but this high will get violated because we did not trade into it fair enough. We have to trade at least a little bit into it, have a bit of price action right in here if we go into the 1 hour. But even on the 1 hour, there's no price action to base it on. And additionally, what I want to talk about is we have another FEG right in here. So this FEG, if we extend it all the way to the right, now we have relative equal highs on the daily, relative equal highs on the 4 hour basically. We have an FEG aligning with those relative equal highs. But more importantly, we also have those relative equal highs that we want to trade into. Those, right? How do I say this? We always have multiple targets to look out for, but we only have one target that we take as a take profit. Now, this is the ultimate target, right? If this trades into it and then hovers back and forth, then you still want to trade into that because that high will get hit, right? But we don't want to go all the way up in there because we're not shooting for the moon. We're just shooting for a little bit of profit and we're done for the day. Okay, so as I told you, you can literally just take a trade right now, right? As long as it did not hit the take profit, you can take the trade. And this is basically the entire framework. So going to the 15-minute, there's also not much to base it off on. If we would go onto a fair value gap first, now we have a little bit of consolidation right in there. but we will trade to the upside. I don't know if it's going to happen today or tomorrow, but it will happen. If not today, then tomorrow. And if not tomorrow, then by next week for sure. Okay? So again, I want you to keep in mind the thing that I've just told you. If this does not work out, please never return back to the channel. I'm a fraud, I'm a scammer, I'm not able to trade, but you'll lose the bet. Simple as that.